Whether you're an avid property investor or about to buy your first property, why do it alone when you could partner with Australia's best buyer's agent? Director of Pure Property Investment, Property Investment Professionals of Australia board member and REB Buyer's Agent of the Year, Paul Glossop, can take your portfolio to the next level. Get in touch today to discuss your investment goals. Get one-on-one insight from Paul Glossop. And for the first 100 people, this service is completely free. Head to purepropertyinvestment.com today to schedule your consult with Paul Glossop directly.
Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Good day, everyone. It is that time of the week. What's making headlines with Phil Tarrant from Momentum Media, where we talk about real estate agents, we talk about money, we talk about investment, we talk about the government, we talk about COVID-19, and we talk about life.
Life is good, Tom.
So, Phil, you know what I was thinking? As I was walking around the Bay Run today, I thought to myself, we're going to look back in a few years' time and some smart people that had a side hustle, that had trust with their community of friends and colleagues, went off and created businesses and solved problems that were newly emerged, and they're going to look at that as their starting point. I think that we're going to go back in a few years' time and people are going to say, yeah, what I did is I set up, this product back in 2020 in April. Like, I'm thinking to myself right now, look at the sort of businesses, pickup and delivery businesses, anything that gets rid of touch points where it, because of social distancing, any business that allows stuff to get to people without too much friction. I reckon they're gonna take off. Anyone that can actually run their business without seeing someone physically, like, let's think about psychologists and therapists. People used to go sit in people's bloody waiting rooms with an old copy of People magazine or new idea that was 3 years old with a photo of Prince Charles on the front cover with some bullshit story. And then they've gone in, seen the psychotherapist. The psychotherapist was running 30 minutes late because they had a client who, was depressed and wouldn't get out of bed and eventually got to their appointment late. Now that's all changed. They press a button and they can see their client finished by 2:30. What do you think, Phil?
I think you're absolutely right. I think you're going to see the next industrial revolution right now. And I'm sure some smart people have already coined the term or whatever that is. But if you think about where the world was heading and where we are headed now, there was this pent up demand and there was technology available for humans to change the way in which they connected and communicated, and now we're being thrust into that. So, when you go back through history over hundreds and hundreds of years, the things that have forced and affected change are typically things like COVID-19. They might come in different shapes and sizes or in a different outfit or different guise, but normally wholesale shifts to how we operate and how we do stuff has been driven by technology. It's been driven by circumstance. So here we are, Tom, smack bang in the middle of it, being narratives, I guess, of mapping this out. And it'll be interesting. And I'll chat about this with some other people I know, because we do so much live streaming now and broadcasting and podcasting. When the documentaries are made about where we are right now, they're going to be going back to conversations like we're having right now and what we're thinking at that point in time. We're diarising what is the new world, and we're smack bang in the middle of it.
And I think, Phil, because trust all of a sudden matters more than ever, because people have got, whenever there's fear and anxiety, what people want, they want to resort to certainty. Trust comes with the certainty. And that's why I believe the side hustle might actually be the beginning of something special for some people, because with the side hustle, you've already got a group of people that trust you, whether it's, a colleague, an acquaintance, a friend. And if that thing that you're doing is highly valued, you've got a early adopter that picks it up, right? And it's exciting. And you know what I've started doing, Phil? I've been writing out every day 3 ideas, because I listened to a podcast from James Altucher some time ago, and he said one of the most useful things that you can do is to become an idea machine. Get into the habit of just coming up with new ideas. Most are going to be shit. Most won't get off the ground. But the process of thinking is going to allow you to actually manifest something, like anything you see in life. Like, think about it. Oh, what was I thinking about? Elevators. Like an elevator. Before it existed, it didn't exist. Someone came up with this concept, right? You just take it up, right? All these concepts and ideas. And I think some of them are going to come out in 2020, 2021.
Well, this is it. And I think of this particular business, and maybe you've got a similar story to this. You know, this organization that I run with my business partner, Alex Whitlock, now is quite a considerable entity, and it reaches right across Australia and globally. This actually started off as a side hustle for me. You know, I was a journalist, and I picked up a little side gig writing some stuff for someone, you know, and yeah, that was before it was actually called a side hustle. I was just doing some freelance work, but that's what evolved into what Momentum Media is today. And I imagine, Tom, I know your background. You started off knocking out green and I think red barbecues, which you ended up, you worked out you're a pretty good salesman, and then you ended up in media. But I don't know how you got into auctioneering, but that probably started as a side hustle.
Oh, the auctioneer was very, very simple. The auctioneer never showed up to one of my auctions. And what actually happened, it was a unit in Cairns. He never showed up. Appointment was at 2:30. The auctioneer never showed up. There's buyers there. So I said, I'll do the auction. And I did it. And it sold. And like most things in life, I don't think that you're 3 years of age and you believe my destiny is to be an auctioneer. What happens is an event happens, and then you do that event, and something might come out of that event. You may never do another auction again, but the auction went off. I liked it. People said, shit, you're better than the auctioneer that we normally have. So then I decide to do another auction, and so be it. And that's what I think happens in life. I believe that people that are, and I had this conversation with Susan, and Susan said to me, oh, what do you think when you were born, what was your destiny? And I think, you know, a lot of people that have got this view that they're going to come out of their mum's stomach and that they're built to do one thing and they were born that way. Like, you know, does Steve Jobs come out of his mum's stomach that you are going to be doing this in your life? I don't think it works that way. I think that life takes you down a path. You try things, you're good at certain things, you're not good at other things, and then you keep sort of working on things that you're good of. The more you're good at something, the more you do it, the more practice you get, the better you become. Work starts coming to you. I think that's what happens with life, you know?
Yeah, it's getting a bit sort of philosophical here, but it's about being aware and conscious of what's going on around you. And when you get given these opportunities, whether it's by chance, accidents, or you orchestrate it yourself, that you capitalize on it and move with it. And that's what the best people are going to be doing in this environment. It's what the best people always have done. Now, speaking of auctioneering, Tom, this is about what's making headlines, looking back at what has happened over the last couple of days in real estate, in property, in mortgages, in wealth creation. And, mate, you're back to work on Saturday, aren't you?
The suit is in the dry cleaners. The suit's gone into the dry cleaners. It's getting picked up tomorrow because that's going to be put on Saturday. And on Saturday, I begin. The calls started to come in. As soon as the headlines hit, auctions, open air are on. As of this Saturday, the calls started to come in, booked around a dozen auctions starting as of this Saturday. And yes, that's New South Wales, Phil. One would expect that that's going to happen around the country over the next couple of weeks. Having said that, the guy in Victoria, he's a little bit myopic, and everything that he's doing seems to be a little bit slower. But I'll leave that there. He did do one good thing. He cancelled all appointments on properties over Easter, and then he did a backflip on the Tuesday. So hopefully that happens, because Melbourne's a big auction market.
Yeah.
Sydney's a big auction market. So yes, so that was big news, and we're already beginning to see the marketplace bring more stock onto the market, Phil.
Are low interest rates impacting on your investment returns? It's time to rethink. Rethink Investing creates wealth for clients through the strategic purchase of positively geared, high cash flow commercial property. Industrial properties, retail assets, or office spaces can be a smart investment option that produces significant and long-term return on investment. Rethink your investment options and look to commercial property. Learn more at rethinkinvesting.com.au. Rethink Investing, Australia's #1 commercial buyers agency.
So the story we're talking about on REB, go and check it out. It was on the 4th of May is when we put it out, lifting the ban on public open homes and auctions, and also all this noise around stamp duties. Now, how are you getting prepared for a day of auctions, Tom? Are you gargling sort of salt and lemon water, getting the voice ready to start shouting and maneuvering? How are you mentally preparing for a back in the game?
I get in. So Phil, I get into the Tesla, and then I drive off slowly down the street, and I visualize what Richie Benno would do, 10 minutes before the first test, calling the first game. Good evening, ladies and gentlemen. Good morning, guys and girls. Welcome here. So yes, there's this repetition there. Now, realistically, Phil, I auction in the inner city. I'm dying for a car spot. Even when I start my auctions at 9 o'clock, I'm dying to find a car spot. And I've been very blessed because where I actually auction, properties rarely don't sell. People are pretty much educated to the marketplace. They're selling every 3 to 5 years in those markets on average. So, Phil, it's going to be the first thing I'm going to go do is I'm going to put the trousers on, and I'm going to see what has actually happened to those trousers. Do they feel tighter or looser? That's what because they haven't been put on. The work clothes haven't been put on. But that's what we're going to do. Saturday's going to be a good test. A lot of people, by the way, feel moved their online auctions to on-site. As soon as they got the news in New South Wales anyway, they rang up their vendors and said, hey, we're going on site. We're not doing the online. We're going to be doing it at your property, open air. Buyers are coming in. So that's what's happening there. On the stamp duty, Phil, big issue because I think that it actually, it's a friction point. It actually slows up a lot of people transacting in real estate.
Yeah, I think so as well. And look, I think everyone agrees, and we're talking New South Wales in particular here, that it's a pretty archaic tax and it's not really effective. They're thinking of changing it into land tax and changing the way they tax land. But stamp duty, I don't know anyone that enjoys paying it. And I sit there and my mind boggles sometimes when I think just about the transaction or the shift of property ownership from one person to the other. The government gets a big earn off it. Now, the state governments need capital to grow these cities that we live within. It's absolutely important that they do generate revenue. We all need to contribute to that. But to your point around, and I saw some graphs only last night, I was reading it in terms of new stock on market over March and April, and it's absolutely fallen off a cliff compared to any other time in the history of real estate in Australia. So we need to get more properties into the market for sale. There's a supply and demand debate, which is, I guess, supporting the fact that prices won't decline as much as what some fearmongers are suggesting. But real estate needs, the lifeblood of it is a transaction of sale. So if we can remove stamp duty to make that, the whole wealth effect or the feasibility of people getting their properties or choosing to make a decision whether to buy or sell, it's got to be done, mate. So I'd highly support that. And again, I know that the different bodies are pushing that pretty hard.
The Deputy Premier, I couldn't believe it. It was music to my ears. I thought it was a real estate agent speaking when I heard him. He said, I'm letting you know we need to actually do something about stamp duty. It's prohibiting the transactions. And also we're announcing that on-site auctions and open for inspections are available. And we're urging anyone that's not seriously buying or selling, don't go to an open for inspection. I couldn't believe it. This guy was not only getting rid of stamp duty, it's the Deputy Premier. He also, I forgot what his name was. And he also said, no time wasters on Saturdays, just the real stuff. This guy was too good to be true.
Roll him out. All right. How many auctions you got on the weekend, Tom?
Two.
All right, I might come out and watch one. See you in action. Back, dusting off the mothballs off the suit and getting back into it. I'll come out and say good day. So another story, Tom, on REB, which is sort of connected with all of this, and maybe this sort of paints a picture that there is more activity going on than what you're seeing, because a lot of it is based on what's on your realestate.coms and what the listings are. Is off-market listings explode in isolation in May. So this is talking about people buying or transacting property before it actually hits the open market. Now, I've got a bit of bit of a beef around this whole off-market type terminology. You know, what is it? There's a lot of people out there saying, hey, I've got these secret off-market properties. You know, there's a property which no one was thinking about they want to buy, an opportunity comes up and they sell it, or there's someone who just hasn't advertised the property, but they are actively wanting to sell it and they're using other means to do it. How do you split between these two things? Because they're very different.
Oh, well said. Well said. Totally confusing. To me, it's like there's off-market, there's off-market, off-market, and there's off-market, off-market, off-market. And I think everyone comes up with their own definition. So to me, I think there is pre-portal opportunities. Pre-portal means it's not hitting real estate and domain, so it's not on those portals. And what an agent has done is actually gone off, signed an agency agreement and said, hey, this is off-market. But is it really off-market? Because they're normally sending out a database to their email of about 10,000 people. They're normally putting it up on Facebook and Instagram. So is that really off-market? Not really, because a segment of the market's going to find out about it, and it's normally thousands. Then you've got what I call the off-market, which is, hey, we're not even going to tell any of our database. We're not even going to put it on Facebook or Instagram. What are we going to do? Hey, I've got a buyer in my head, and I'm going to ring that buyer, and I'm going to tell that buyer, I've got this home in Windsor Street, and that we're going to take you through it. Maybe that's closer to a definition of an off-market transaction because only one person finds out about it, Phil. Quite frankly, I think there's probably been a bit of a surge because there is a few vendors out there who are thinking, you know what, I'm concerned about coming onto the market at the moment because maybe there's not a lot of buyers out there, which is bullshit because there's a lot of buyers out there, but maybe there's not a lot of buyers and I don't want to pay the fee to realestate.com and domain. So what I'll do is I'll look at a cheaper option. And I think that's the case. I've got a personal view that if I was selling my house, I don't want 10% of the market looking at it. I want 100% of the market looking at it because I want to go to sleep at night thinking to myself, everyone saw it, but I realize there's a group of people out there that want to keep things on the quiet.
Yeah, I agree with you. And look, we cover this stuff off across REB and smart property investment all the time. You know, it's horses for courses. A lot of it just comes down to terminology, but you know, as long as properties are being transacted, I think the skill of the real estate agent is actually understanding what are the needs of the buyers, actually going out there and finding those assets if they're not available right now. And that's what the best ones do. So we'll keep covering this stuff off, Tom. Hey, when we got together last week for What's Making Headlines, we sort of spoke about the unveil of the top 100 agents.
Yes.
And we really enjoyed that chat. It was quite a long discussion. If you didn't see it, go and check it out. Just on Tom's Facebook, or you go and check out Real Estate Business. You can watch it. It was about 50 odd minutes. We actually broke down a lot of the top performers. But one of the key stories over the week, Tom, on REB has been about the profile of the top 100 agent. And we sort of spoke about average years of experience, 16 years, 2 support staff, 91 sales, average commission of 1.77%, and 45 days on the market. So what this tells me is this benchmarking, this perpetual benchmarking that you see mainly in real estate more than other industries of how do I stack up against the other people? And some of it is ego. Some of it is, people aspiring to do it better and sometimes just a bit voyeuristic as well. But everyone wants to know how they're tracking against the guys and girls who are doing it the best.
Yeah, and look, I'm looking at those numbers there, which is average years, 16 years, support staff 2, number of sales 91, average com 1.77, 45 days. This ain't shocking. This to me is, wow, yeah, that's what I would have thought. That's what I would have thought. As someone that works with agents that are in the REB top 100, that's what I would have thought. The 16 years, mate, never compare your chapter 1 to someone's chapter 10. It takes time in the marketplace. We can see that. Support staff, well, as I've said before, the pilot doesn't serve drinks on the plane. Maybe you need to actually get someone to help you along. Average number of sales. Well, I've got to tell you, there's people out there that are doing, 200 sales. There are people that are doing 50 sales, but it appears that 91 sales is going to make you up there based on if you've got a decent price point. Commissions, we've been saying it a long time, Phil. Commissions aren't what they used to be. When I was in real estate, they were 3.1% for the first 100,000 and 2% thereafter. It's now 1.77% if you're a top REB 100 agent. And that says to me, fees have been affected, but then what? you know what? So have taxi fares. Everything's been affected. Flight fares have been affected. You name it. Everything's been impacted. And I wouldn't be surprised if they get impacted even more going forward post-COVID-19. And average days of 45, well, yep, that would have been for the last 12 months. Got a funny feeling, Phil, that might go up when the hangover starts and when we get rid of JobKeep. And I do think that things are pretty good, but I think we're going to get a little bit of a bump later on in the year when reality sets in.
Yeah, I completely agree with you. And we're going to see that play out in property market. There's some pretty good analysis going out there right now about what will happen to property markets. And we talk about markets, there's markets within markets, there's markets everywhere, but the collective sentiments towards how property will perform from a global but also a domestic level. Be careful who you listen to, be careful to what you read in that regards. There's some very informed opinions out there, and I'd acknowledge some of them. Christopher Joyce from Coolabah, who writes for the Fin, has been producing really good stuff. He's normally quite bearish on it all, but his view was that he's sort of saying 5%-ish potential dip for a period of time, but then to best case for the period of time 0%, but then we're going to get back into that same rhythm that we saw prior to COVID-19 of reasonable sort of market activity. So I draw on opinions like him. AMP's chief economist, he's a little bit more, he's sort of 5 to 10%.
Who's that? Shane Oliver, isn't it?
Yeah, Shane Oliver. But then you've got other people sort of talking about 30% reductions to pricing to property values. And, just be really careful who you listen to. And if you're advising your customers and vendors, or whether you're a buyer's agent, you're looking to secure properties for customers, it's in your vested interest to make sure that your buyers or sellers are as informed as possible and ensure that they're getting the right information as well, because we're talking about big decisions here, buying and selling, Tom.
Well said. Don't just listen to the advice, listen to who it's coming from. And I've got to tell you, the guy that you mentioned first, Joy, who occasionally writes for the Fin Review, he's got not a bad track record, Phil. Like, he's picked up a fair bit of the stuff. If you look backwards, that's one of the things I do when I'm bored, Phil. I go off and I Google real estate forecasters and I read what they said, in 2014, and I listen to what they say. And I've got to tell you, there's a few good ones there. Louis Christopher's been pretty good. I've had a few of them on. I've had Tim Lawless on, Louis Christopher. One thing is for sure, no one is thinking what that guy Henry Dent or Harry Dent thinks, which 40%, is 40%.
He's been talking about that for 20 years, So but the people you mentioned, SQM, it's a quality outfit. CoreLogic, quality outfit. You successfully clues, Tom, and these people, you go and check out their past predictions. They've been in the market, most of them, for well over 10 years. So they're bright people with big engines of data. So, they're giving you the facts. It's your job to interpret and analyze that and use that to make more informed investment decisions or buying decisions, or support your vendors. So, that's up to the agents, that's up to the property managers, and that's up to the individual investors. Just be careful, be concerned, and don't listen to me. I'm not giving you any advice whatsoever. This is just my opinion on where you should be going for information. So there's plenty out there, not always created equal.
Love property? The current Buyer's Agent of the Year and Director of Pure Property Investment, Paul Glossop, does too. And right now, he's offering you the chance to secure his best-selling book, A Surfer's Guide to Property Investing, absolutely free. Simply jump on Pure Property Investment's Facebook page, hit the message button and type Smart Property to claim your free book today.
Now, Tom, some other stuff that's been happening right now. We're recording this on the Thursday after the first Tuesday of the month. The RBA gets together first Tuesday of every month to let us know what's happening with interest rates. Official cash rates stable for the period in time. The Reserve Bank governor had reasonable, they're always measured comments, but there wasn't really anything there which I found too concerning when it comes to property and property values moving forward. They're being, quite cautious in their commentary around this, but it didn't ring any huge alarm bell for me.
So well, and it's interesting because people hang on every word that comes out of the RBA, and they're listening to what the captain says because they believe that their voice is a more accurate voice than anyone else. And what's happened? No surprises there because the rate's still low. Most people are borrowing money now that are buying real estate at somewhere in the 3%, which is extraordinarily low. But Phil, one other thing I want to touch on, and I think you had it noted that we were going to talk about it, is one of the banks went in and decided that they were going to touch some of the money in a redraw facility that some people had.
Yeah, this is what you're starting to see a lot of shadow policy starting to happen now within the lenders. So what this means is it's twofold. One is, if you had a pre-approval beforehand and the green light from banks to go and borrow, a lot of that's been pulled back. So they're changing their assessments. And a lot of that also is around just how they view you, the industry you work within, the stability of your employment, what your current financials are if you're an SME. So it's a lot tougher to secure financing because there's a lot more oversight. But then there's also these policies around, yes, there's some extremely sharp rates out there and people are looking to refinance to potentially use that equity for something, or they've got a considerable amount of money in redraw facilities. What's now starting to happen is they're looking to limit how you can extract that. So if you've got offsets, at least you've got those capital. But if you're looking to refinance a home loan or investment loan at a point in time, it's just not saying, hey, look, I want to pull out 20% of this and I want to use that cash for whatever. You need to say how you're using the cash, and unless you can give good evidence about how you're using and the utility of that finance, it's going to be really hard to actually get those loans set. And same within redraws. They just don't want people drawing out wholesale amounts of cash because, they've got to be shoring up their own balance sheets on this stuff, and certainty around lending in particular when you see more defaults coming online. So this is what we're starting to see, Tom, and you're going to see this sort of shadow policies and nuances around lending into the future and into the long-term future. My advice or my recommendation is, if you currently have mortgages, I've just gone through this myself, one lender in particular on a property I have, St. George Bank, they've been very good. I've called them up and say, hey, look, I'm sure I can get a sharper rate. Here's all the reasons why. How can you help me out? And I've been able to get a lot of savings on my interest rates, Tom, in this market. And, if you're a property investor or even an owner-occupier with property, go out there and have those chats. A bit of pain, a bit of a time and effort, but you can make it happen. If you're looking to invest in right now or realize the equity that you have, it's going to be a bit more of a challenge.
Yeah, well, listen, every supplier and provider of any services now is not going to like to hear this, but I can tell you there's plenty of people that I know, Phil, that have got on the phone to their cable TV channels, to the internet providers, and you know what it's like. When you threaten that you're going to leave, they move you on to another department, which is a customer retention department, and they'll have a crack at trying to keep you there. And often that crack is that they're going to give you more value for what you're paying, or on occasions, they'll actually reduce what you were paying because keeping a customer at a lower yield is better than having no customer. So if you've got nothing to do one day, get your diary out, find out everyone that you're paying money to, and actually go through and give them a call and see how flexible they are at the moment.
I highly recommend doing that. And, with the banks in terms of retention, there's some lenders offering sort of $4,000 cashbacks to shift your home loan provider at the moment. So, what this says to me is that, yes, there is a lot of conservatism in the marketplace. There's still some uncertainty around property values. There's a lot of uncertainty around the economy, but banks love to lend money because that's how banks make money and how they deliver dividends to their shareholders. So banks want to lend right now, but they want to be lending to the right person. So, if you're an attractive customer, you can go out there and you can negotiate some really good deals, but you need to make sure you are an attractive customer. And that's also about how and what you're buying as well. And there's another story we have here, Tom, and this was on the advisor.com.au, which is our platform for the mortgage industry. And this is bank ceases lending for off-the-plan purchases. So, banks, and this is Teachers Mutual Bank, TMB, and they're pretty much saying they don't want to lend money on off-the-plan stuff because they just don't know what's going to be happening moving forward. And a lot of these, and I've seen some numbers coming out, and I think by memory in Melbourne, I read recently, is that something like 70% of properties, and don't that number might be a bit grey, but it's like 70% of properties which are now hitting settlement are coming in undervalue from what the original purchase price was. It's a big issue.
Big concern, big concern. Valuations are also a concern when there's an offer and acceptance on a property and they get the valuer coming through. I do realise that some banks are getting valuations with a COVID-19 discount in there, but overall, it hasn't been too bad, but I do totally understand this off the plan concept, because even though banks, I know that one of the stories that you're going to touch on as we finish off is mortgage activity has definitely been down. Banks do want to lend money, but it appears that they're super paranoid, as you said, about off the plan. And I get that. There are areas where there are blocks of units that have got hundreds of units that are sitting there. So who knows what these properties are going to be worth when there's other ones coming out of the ground in 6-12 months. I mean, just because COVID-19 is going on, these properties that have already commenced, they've got to finish. They're going to come out of the ground. They're going to be on the market in competition to other properties. So who knows what's going to happen in that new unit sector. But mortgages are definitely down, aren't they, Phil?
Yeah, that's right. So this is again on the advisor.com.au. According to the latest data from property research group CoreLogic, home loan activity fell nationally 16.5% month on month for the week ending 30th of May. So that's a comparison month on month. So that just goes to show an immediate blip in how Australians are reacting to COVID-19 and being a lot more cautious in buying activity. And, mortgages is really a reflection of how real estate transactions are taking place. So I think that downturn, you've seen it everywhere. A lot of it will be environmental in that, auctions can't take place. It has been harder to do real estate recently in terms of inspections, but it's the overall sort of sentiment. It's a sentiment-driven response to COVID-19 with people when they're unsure. Most smart people don't do, and that's what we're seeing right now there in mortgages. I've been chatting with a lot of the big mortgage brokers and mortgage aggregators. A lot of them had cracking months in April, which is a run off the back of all the activity from January, February, March of this year. But they're all indicating that there's going to be a drop over this period of time. And it goes back to this blip we're talking about. Once we get through and understand how, as a nation, where we're going to respond, or we're responding to COVID-19, this reality of how the situation is going to set in for a number of months. And then slowly and surely, the wheels of commerce will start getting going, and that will change and shape confidence moving forward. And all of that's going to be led by how certain people feel about their jobs or their ability to generate or manufacture income. And then you might see an increase in mortgage rates after that. But I see you're going to see this flatten out for quite some time.
All right. Well, Phil, next week when we catch up, obviously one of the key stories is going to be the decisions of Friday's cabinet meeting, where we're going to work out, what you're allowed and what you aren't allowed to do. That meeting's on tomorrow. There are, gym junkies hanging there by the edge of the teeth, wanting their gyms to open. There are cafe owners that are sitting there hoping that they can do more than takeaway. So on Friday, that information is going to come out. We'll talk about that on Thursday. We're going to continue talking about all the big headlines that are coming. But it's great to have you on again. Fantastic.
Good to see you, Tom. And I'll try and come and see you on the weekend, mate. Well, give me a time and date.
The one that's for you is going to be at Birong at 2:00. Bring your checkbook. Going first, second, third, and final call. Sold to Phil Tarrant over there, sir. Congratulations. Just another one to your portfolio.
No, I don't know if I like that area at the moment, Tom, but I'm sure you'll tell me all the reasons why I should be investing there.
100%, because the best property to buy is the one that Tom Panos is auctioning on the day. All right.
Mate, I've watched your auctions, Tom. People spend way too much money. You keep driving that price north.
Correct. That's what we want. More money. All righty. Thanks a lot, Philly.
Thanks, mate. Good to see you.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Are low interest rates impacting on your investment returns? It's time to rethink. Rethink Investing creates wealth for clients through the strategic purchase of positively geared, high cash flow commercial property. Industrial properties, retail assets, or office spaces can be a smart investment option that produces significant and long-term return on investment. Rethink your investment options and look to commercial property. Learn more at rethinkinvesting.com.au. Rethink Investing, Australia's #1 commercial buyers agency.